In today's class, we will be solving another question on the preparation of journal entries. The question goes like this: pass the journal entries for the following transaction in the books of XYZ traders for May 2020. We've been given some transactions for May 2020. These transactions belongs to the books of accounts of XYZ traders, and we are expected to prepare the journal entries from the transactions. Now let's quickly look at the transactions and then we will start preparing the journal entries together. First is started business with cash rupees 2 lakhs. We know that whenever a proprietor starts or whenever the owner of a business starts a business and when he brings in cash, that cash is referred to as capital. So on 1st of May, the transaction that we are talking about is bringing in of capital. Third, it says bought furniture for cash 30,000. Fifth, bought machinery on credit from global traders. So on the difference between the transaction on third and fifth is that third transaction, you are settling it for cash. The transaction on fifth, it's on credit, which means you will be making the payment later. Sixth, it says purchase goods for cash rupees 5,000. Ninth, purchase goods from Bharat for cash. Now notice over here, it is exclusively mentioned that you are purchasing the transaction or you're carrying out the transaction for cash. So it is understood the transaction on May 9th, it's a cash transaction. 12th, purchase goods from Thomas. So on 12th, you are purchasing goods and that's for Thomas. But in this case, the transaction on 12th, the mode of transaction, is it credit or is it cash? It is not mentioned. Since it is not mentioned and we see that the transaction has been carried out with Thomas, it is understood this particular transaction, it is for credit. So from 12th, the May 12th transaction, we see that the transaction was carried out with Thomas and it has not exclusively been highlighted whether the transaction is for cash. So in that case, that transaction is considered to be a credit transaction. 15th, sold goods rupees 12,000. So here it is a cash sale. 16th, sold goods to Karthik for cash. Since it is exclusively highlighted, we know that it is a cash sale. 18th, sold goods to AB. So in this case, it is not highlighted. It is not highlighted that the transaction is for cash. So it is understood it is a credit sale, which means you're giving goods to AB right now. AB will be making the payment later. 20th, paid Globe Traders rupees 50,000. So here what is happening is you're making a payment, you're giving money to Globe Traders, they will be releasing the payment later. 12th, receive payment from AB rupees 8,000. So AB is making some payment and he's giving you 8,000. 23rd transaction, paid rent rupees 10,000. So on 23rd, you are paying rent and since payment of rent, cash is involved. So we know it is a cash transaction. Now we will have to prepare the format of journal and we will have to pass the entries for these transactions. So let's do that right now. So I've got the format of journal prepared over here and right on top, okay, we will have to write in the books of. Now we have to highlight to whom does this books of accounts belongs to. We know that these books of accounts belongs to XYZ trader. So we will mention the name on top and which books of accounts are we preparing? We are preparing the journals. So that's the reason why we mentioned is journal entries. We already are familiar with the format of journal. It has got date, particulars, debit and credit column. Okay. Now we also have a ledger folio column which is mentioned over here. I've already explained to you that the ledger folio column, it is used to record the page number of the ledger when you post the transactions. Okay, so at the time of posting transaction, that is when this would come into handy, or that is when this would come into picture. So now let's start off with this. So first transaction is on 1st of May. 1st of May 2020. So what is the transaction on 1st of May 2020? Started business with cash. When you start a business with cash, what is happening to cash? cash is coming in. Who's contributing the cash? Owners contributing the cash. So the two accounts involved in the first transaction are cash and capital. Cash is real, capital we know is personal because it is representing the owner or it is representing the proprietor. So capital account is personal. So the two accounts involved over here are cash account. Okay. So since cash is coming in, cash you will debit. So cash account you will debit. So cash it is 2 lakhs. Cash is 2 lakhs. So that has been debited. And to capital account. We know that capital is personal. A golden rule for personal account is debit the receiver, credit the giver. So in this case, the proprietor is giving. Now we have to write the narration being started business with cash. We already know that narration you always start with the letter P or with the phrase. Let's move on to the next one. The next one is 3rd May 2020. Okay, the next transaction is on 3rd May 2020, and the third transaction is bought furniture for cash. So which are the two accounts involved over here? The two accounts involved over here are furniture account and cash account. Now, furniture account, we know that furniture account is real. Okay? We know that furniture account is real. Golden rule is debit what comes in. So when you buy furniture for cash, furniture would be coming in, and furniture of 30,000 is coming in. Now, when you buy furniture for cash, what is happening to the cash? Cash would be going out. Cash would be going out, and since cash is going out, you will credit cash. Being bought furniture for cash. So that's been completed. Next one, 5th May 2020, and the transaction is bought furniture on credit from Globe Traders. So here, the difference between the transaction on 3rd and the transaction on 5th is that 3rd is for cash, transaction on 5th it is credit. So here again, the two accounts are machinery. Since it's a credit transaction, you will have to carry out the transactions against the name of the person, which is Globe Traders account. Globe Traders account would be personal. So machinery account debited 50,000 to Globe Traders account, which is personal, and golden rule for personal account is debit the receiver, credit the giver. So in this case, Globe Traders is giving you the machinery. Okay, Globe Traders is giving you the machinery. So being bought machinery on credit. Bought machinery on credit, and that is 50,000. Transaction on 6th May. Purchase goods for cash. So when you purchase goods for cash, the two accounts involved are purchase account and cash account. So purchase we know is real. So purchase account debited. Why? Because when you purchase, goods are coming in. And we already know that whenever you carry out a purchase, the purchase will always be carried out against purchase account. You do not carry that against goods account, because what are the nature of the goods that you can buy? The nature of the goods that you can purchase are your raw material. Because of this, it will be purchase account. Okay, so it will be purchase account. 1,000 to cash account. 1,000 in purchase cash. Okay. Ninth of May, purchase goods from Bharat for cash. Purchase goods from Bharat for cash. Purchase account debited. Purchase account debited. Here it's 6,000 to cash. Now, why is it that I'm considering cash over here? Because it's exclusively mentioned that from Bharat you're purchasing the goods on for cash. Being purchased goods cash from we are moving on to the transaction on 12th May. It tells us that 12th May, purchase goods from Thomas. Now, notice over here, the transaction is mentioned to be you are purchasing goods from Thomas. But it has not been stated whether it is for cash or whether it's on credit. Since it is not exclusively mentioned, it is understood that this transaction is a credit transaction. Since it is a credit transaction, you would be bringing in the name of the person with whom you are engaging the transaction. So the two accounts here would be purchase account and Thomas account. Purchase is real, Thomas is personal. Golden rule tells us debit the receiver, credit the giver. So purchase account debited and the amount is 4,500 to Thomas. 4,500 being purchased goods on credit from Thomas. 4,000. Next is 15th May 2003. Sold goods rupees 12,000. Sold goods rupees 12,000. So here, when you carry out a sale, what happens? When you carry out a sale, you're giving out goods and cash is coming in. Whenever you carry out a sale, the name of the account would be sales account. Okay? The name of the account would be sales account. So sales is real, and then cash is coming in. So the two accounts over here are cash account and sales account. So cash is real, cash account debited. $12,000 to sales account. 12,000. Sale of goods or cash. Sold goods to Karthik for cash. So here it is exclusively mentioned that the sale is for cash. It is understood it is a cash sale. So again, here it will be cash account debited. The amount is 3,000 to sales account 3,000 being sale of goods to Karthik for cash. Next one. Sold goods to AB. So on 18th May, the transaction is you're selling goods to AB. When you sell goods to AB, what is happening? It is not mentioned exclusively whether it's a cash or it's a credit sale. So it is not mentioned, but here, since it is mentioned that you're carrying out the transaction with AB, it is understood the transaction is for credit. Okay? The transaction is for credit. When it's a credit transaction, you will have to carry out the transactions against the name of the person. AB account is personal. Golden rule for personal account is debit the receiver. When you carry out a sale to AB, AB is receiving. So AB account debited, AB account debited. The amount is 8,000 to sales account 8,000 being sale of goods to credit. So it is understood it is a credit transaction. Let's go to 20th. 20th May. 20th May, the transaction is paid Globe Traders rupees 50,000. You are settling a payment to Globe Traders. Since you are settling the payment to Globe Traders, there are two accounts involved over here. The first is Globe Traders account. Second is cash account. Why? Because when you settle a payment, what happens to the cash? Cash will be going out. Okay, cash will be going out. So the two accounts over here are Globe Traders and cash account. Globe Traders account we know is personal. Golden rule is debit the receiver, credit the giver. When you make a payment to Globe Traders, what is happening? Globe Traders are receiving the payment. So Globe Traders account debited 50,000 to cash account 50,000 being payment of cash to Globe Traders. Next is received payment from AB rupees 8,000. Okay, received payment from AB rupees 8,000. So the two transactions over here are the two accounts which are known here are cash account and AB's account. Cash is real person and AB is personal. So golden rule for personal is debit the receiver, credit the giver. So here AB is giving. So AB's account you will credit. Now when AB gives or when AB makes a payment, okay? When AB makes a payment, what is happening to cash? Cash is coming in. So cash account debited 8,000 to AB account 8,000 being received payment from AB. That is complete. 23rd May. Last transaction is paid rent rupees 10,000. So which are the two accounts involved over here? The two accounts which are involved here are rent account and cash account. Rent we know is nominal. Golden rule is debit all expenses. So rent account you will debit. So 10,000 to cash account 10,000 mean payment of rent. Okay, and that. So with that, we have completed the preparation of journal entries for these transactions of XYZ traders.